I think that the market is going to have a very bearish period following the rate cut. I know that that's crazy. I know everything that everyone's hearing related to these rate cuts is that it's going to be bullish, everyone's going to buy, and we'll just moon. Unfortunately, even though that sounds good, it's just not what history tells us. What history tells us is that in the short to medium term, after your first rate cut, yeah, you should be bearish. And in the long term, of course, it's going to be bullish. We all know that any long-term look at the market, it pays to be a perma bull. So I'm not saying that it's just going to completely end the stock market as we know it, but I'm saying in the short to medium term, I in no way would be bullish following the first rate cut. And my answer for that, to keep it as simple as I possibly can, is there's no point in US stock market history or monetary policy history that we started rate cuts and the market went up. It just simply does not exist. On the screen right now is the similarities of our current situation and what we saw in 07. We topped on July 17th. Guess what? We have a top this year on July 17th. Then all of a sudden, we started rate cuts in 07. We know on September 18th here in the US in 2024, we're probably going to get a 25 bips rate cut. That is what the market is pricing in, and it's probably going to happen. Then the question is are we going to play out the same way that we've seen it play out in 07? I want to be very, very clear when I say this. Every single time we have had rate cuts from the moment of the first rate cut to the actual bottoming, on average, we've dropped more than 20%, and every single time we've dropped double digits. Every single time, no counterexamples to this. So if you look at 1970 and 89 right here, dropped 20%, 1981, 24%, 2020, 27%, 73 and 2000, 40%. And then in 07, we dropped 56%. These are the measurements from where we were to the actual bottoming from the first rate cut. So where we were at the first rate cut, all the way down. Now, I do want to let you know, once the Fed cuts rates, the average sell-off for the SPX is approximately 30%, and it takes 13 months to find the bottom. And this is data since the 1970s. If you go back even further than that, it shortens a little bit. But just to give you an idea of like the time frame of the first rate cut to the actual bottom to where we start to bounce off of it. The cause of the recession could be many things. People will find a reason after the recession is over. Right now, we're seeing a rapidly rising unemployment rate. The 10-year, 2-year treasury yield inverted for the longest time in history. Housing and retail slowing. Time will tell. So yes, we're seeing cracks in the labor market. That's concerning. And whatever, historians will write about why it happened. I'm just letting you know what happened historically, and I have no reason to think that this upcoming time is going to be any different. I don't have the extreme nature of it. As always, as a trader, just trade with the trend. Do not fight the trend. Do not fight the Fed. Do not fight monetary policy. I just want to put this out there because I want more people to be more informed, because I'm hearing too much chatter and posts and discussion of bullish euphoria when simply there's no time in history that suggests post cut of rates that in the short term, there's no time that says you should be bullish. It just simply does not exist. Do whatever you want with this information. I just want you to be a little bit better informed.